Good morning, it is John Gillens, your morning NewsWire, Stansberry Research. It is November 1st. Hard to believe that, November 1st. All right, we're coming off the worst month in 6 years. Everyone has read that headline. Let's get onto it. It wasn't that bad. Same reaction in February, if you'll recall, the nightmare in February. All right, so much of what recently happened was because of weak setups elsewhere. What I mean is global fund managers, they've got exposure throughout the globe, got slapped around in every asset class, and at some point had to say uncle and no mas, and that's why we saw extraordinary pressure in the U.S. markets, which are starting to snap back. So nothing like a clean slate in November, and you'll find the same dopes who are selling everything will now buy up the carnage, and why we've had the biggest two-day move since, again, February. So you know what changed? Nothing changed. There's talk about a deal with China, and if the house goes blue, you can count on a deal at the G20 meeting. That's going to help markets. It's just how portfolio managers are thinking. This morning, China put out their Caixin PMI, Producing Managers Index. It got a lot of positive press, but I think they're front-loading exports, and another reason why they've got to get a deal done. Japan was off 1%. Their company, Docomo, which is mobile telecom, that company crashed. The government has effectively told mobile carriers over there to cut their fees. How very dictatorial of them. Treasuries are selling off for a fourth day, so there's been no panic. Crude oil is below 65. I would use that as another gauge of no panic. And the Saudis certainly have their marching orders. The spigots are wide open. Oil at the pump here, as low as possible in front of the elections, is helpful. So you're filling up at 275 as opposed to 3.25, feeling a little bit better about what's going on. Oil stocks have rallied even though crude is sold off. Oil stocks were grossly oversold. So value buyers come in. You know, you pick up some spicy dividends, and when oil reverses, and it always does, you're never going to catch up. So that's the mindset. Earnings tonight, Apple and Starbucks, and you're getting into the meat of the small and mid caps. So you'll see hundreds of smaller companies reporting. And earnings have been collectively solid. Revenue growth is still your guide. Other things today, U.S. auto sales will be out. Expect those to be lousy. Interesting to see how the stocks will react because auto stocks have been so bad for so long. I believe today is a give back day, mild, but on weakness, the key tells will be buying financials, technology, and energy. All right, better tone. Welcome to November. Hey, if you're enjoying these videos, don't forget to press that like button. Comment down below, and if you're new here, don't forget to subscribe, please. And remember to click that bell to be sure you don't miss out on our newest updates. Thanks a lot.